I'm often asked about angel investing. That's investing as an angel investor, a private investor into a private company. And it's become very popular. There's websites like Crowdcube, and there are others which do crowdfunding. In other words, they go to the public, they're FCA regulated. So what are my criteria and rules for deciding whether or not to do this at all? Well, first of all, rule number one, the platform which I'm going to use to invest, such as Crowdcube, let's say, has to be FCA regulated, Financial Conduct Authority regulated. Second rule, I work on the basis I will lose 100% of my money. So you might say, why the hell do you do it? Well, I've been an angel investor for many years, and I enjoy it. I enjoy reading about these various companies, but I work on the basis 100% of my money will be lost. Why do I work on that basis? Well, they're private companies, and until they exit and sell and become huge entities, guess what? That's the best assumption to make, at which point you may want to switch off and say, well, forget that. I don't want that kind of risk. They also have very good risk warnings. You must read these. Okay, those of you who think that you're about to get huge returns just because they're private companies and they spin good stories, forget about it. Again, you might say, well, why the hell are you interested? Well, let me look at what I do look for in individual companies. And these risk warnings are really important, okay? Whilst you will get some tax relief, it may or may not happen, right? They all work on the basis you're going to get enterprise investment scheme tax relief, but you might not get it. Okay, because tax rules change and things don't happen. Lack of liquidity means you can't sell the shares the way you can a listed company. Dividends, highly unlikely. When future investors come in, your investment might become worth even less because the subsequent investors have come in at even lower prices, effectively, something called dilution. Okay, it's important to understand what dilution is. Some businesses who pitch for equity investment, that means share, through Crowdcube offer ordinary shares, which may include preemption rights. What the hell are those, Alpesh? If you don't know and you don't bother looking and understanding, then do not do this. You will be gambling. They protect investors from dilution. In this situation, the business may give shareholders with ordinary shares the opportunity to buy additional shares during subsequent fundraising rounds so that they can maintain or preserve their shareholding. So, for instance, somebody who owns 10% might not want to, with future funding rounds, end up with 8% or 5%. The maths can be a bit tricky. And they might have what's called anti-dilution provisions within there. All of these things are intended not to screw anybody over, but just to make sure that one part of the early investors maybe don't suffer. So again, something which, unless you've got a lawyer, you're not going to know or be aware of. So again, a risk when investing in what are known as convertibles, right? If you don't know what those are, it's worth reading up on this, because you're not always buying shares. Sometimes you're buying convertibles. Convertible is an investment for equity in a company where the shares will be issued at a future date. Usually the shares will be issued when the company completes a larger round of funding. Convertible allows a company to raise equity finance without setting a valuation. What? You're buying something without knowing how much you're going to pay for it? The valuation will be set by the subsequent investment round or an agreed valuation on a long stop date. It's important to remember investing in the convertible is the same level of risk as investing directly for equity in a startup company, and your capital remains at risk. Yes, assume you will lose 100% of it. All right. So, like I said, there's a whole bunch of risks. We put that to, again, if I've not already put you off, and that's not my intention. My intention is not to put you off. But the point with this is that a lot of people don't often realize the risks involved in these things. So let's go back. Let's go back to something like Moneybox, which I happen to have invested in. Why did I invest in it? Well, there's several key factors that I look at. I like to invest in things where I'm following a trend. So it's overinvested, 607%. In other words, the number of people who wanted to invest, or the amount of money people want to invest compared to how much they were looking to raise. Okay, their target was $1 million. They've raised 6. That's usually a good sign. The equity is only 4%. Remember Dragon's Den? You watched it? Well, I'm not sure what's the pre-money valuation. If you don't know what that is, Google it. Pre-money and post-money valuation. Well, it's £142 million. Means nothing until you exit. Okay? Share price £3.50 means nothing until you exit. All right, 450,000. Now, this is what's interesting. So I want it to be oversubscribed. I do want to look at the story behind it. And the great thing about crowdfunding sites is they train these companies up to make sure they give all the information that's relevant. For instance, you can see their website, Twitter handle, Instagram, Facebook, to get an idea of what the company does. Okay, I want to see assets under administration or key factors they've put here. Of course, these key factors are put here to make you all excited and think, oh my God, this is a no-brainer. Okay. However, nothing's a no-brainer when it comes to private investing, right? Moneybox, and it explains what they do. Yeah, they'll always have great stories. They'll always have a real video. The video should be slick, simple, easy to understand. All of them will be able to do that, right? You'll be able to see the team, who are the people behind it. Oh, he was a partner at $2 billion global equity hedge fund and analyst at Fidelity. Fine. Co-founder of Bloom and Wild. Right, I like this, guy's got track record, he's good, he can deliver, right? These are all factors which are relevant. They might even, once you buy a first bid in, and you might just buy £1,000 worth, for instance, you might start thinking, I think I might want some more. Okay, that's fine. Always ask to see the request access there. Now, I'll tell you what else is interesting. These things don't bother me so much. Last investment 59 seconds ago, largest investment is 100,000. Today, they've already raised 794,000. Remember, it's not a listed company. It's not like there's momentum and people getting all excited and there's a share price where you can exit. You can't exit. All right. So don't get overexcited by the momentum. I'm trying to calm you down on this exit strategy. Oh, by the way, you can ask questions as well. Most important thing about all these questions and their updates is you'll learn loads. You can see how user-friendly this is. If nothing else, you'll get a phenomenal education on angel investing. But like I said, assume you will lose 100% of your money. It is the best, safest way to make these assumptions. Most of my angel investments, the vast majority of them, I haven't exited. I've not had the opportunity. And some of them, I think my oldest one is in a company called Aranco, which has become huge. I think I first got in 20 years ago, pretty much, when it started, and I used to be non-exec chairman. Aranco, they do the valuations for all the Silicon Valley tech companies for them to raise capital. Anyway, it gives you an idea that, 20 years and you still not managed to get an exit? Yeah, exactly. Okay, and I'm in the private equity business. Now, these great little updates, read them, you'll learn so much about exit strategies and so on. Do not get overexcited about anything. Everything is built and created. It's the job of Crowdcube to make things user-friendly, easy for you to understand. I assure you, everything will get you excited, every single investment. And this is just one. This is not an endorsement for you to go out and invest in it at all. Assume 100% of your money will be lost. Okay, what this is, however, is an invitation for you to learn about angel investing and have a look at these. Look at this, robotics. I've not even had a look at this, by the way. Robotics and how it's working. The greatest thing to learn from all of these things is, okay, so you've got solar energy, for instance. Look at their presentations. That's really important to me. I want to see if they're overfunded, always. This happens to be a convertible, by the way. Doesn't mean it's more risky than equity or less, but what you will learn is invaluable from their documents, from their presentations. I love looking at these documents. I'm a bit of a voyeur. Even if I've got no interest in solar energy, let's say, I still want to see, okay, what's happening. One of the best ways to learn are these presentations, okay? So even if you've not got plans to be an angel investor, and you will enjoy it, then at least read about these things as well, because it will keep you bang up to date of what's happening in the world, okay? Thank you very much.